Today, we're diving into an investment framework that's a little different. It tells you to toss out the spreadsheets, forget the earnings reports for a minute, and focus on one single, incredibly powerful human emotion: regret. We're going to break down a mental model that argues one single decision could literally define your entire financial future. So, let's start with a little thought experiment. I want you to actually do this. Close your eyes if you have to. Fast forward 10 years from now. It's 2035. You're looking back on all the choices you made, your portfolio, everything. This entire framework kicks off by asking you to have a little chat with the person you're gonna become. And this is the core idea right here. We're not talking about investment risk as some calculation on a screen. No, we're reframing it as a high-stakes conversation with your future self. It's really all about understanding the emotional traps that we as investors almost always fall into. Okay, so here's the central argument, and it is a bold one. The thesis we're exploring today says that your biggest future regret won't be about some big market crash or recession. Nope. It's going to boil down to one specific choice you made about one specific company: BitMine, ticker BMNR. So let's unpack the framework that gets us to a conclusion like that. So to make this whole idea feel real, let's ground it in one of the most legendary business decisions in modern history. Turns out Jeff Bezos gave us the entire blueprint for this way of thinking, long before Amazon was the giant it is today. I want you to picture this. It's 1994. Jeff Bezos has a cushy, high-paying job on Wall Street. He's comfortable. But then he sees this one number, and he just can't get it out of his head. Internet usage is growing at 2,300% per year. An absolutely insane, mind-boggling number that sparks an idea. And that created his dilemma. Does he stick with the safe, lucrative career path, or does he risk every single thing he has on what, let's be honest, sounded like a completely bonkers idea at the time: an online bookstore? So how on earth did he make that call? Well, he didn't use a pros and cons list. He used a mental trick, a little bit of time travel. Bezos literally imagined himself at 80 years old looking back on his life. And from that vantage point, he asked himself two very simple but very powerful questions. First, will my 80-year-old self regret leaving my job and missing that year's bonus? And second, will my 80-year-old self regret not even trying to be a part of this internet thing? This simple reframing of the problem, well, it was the key that unlocked everything. And the genius of this test is that the answers were just immediately obvious. The regret of missing a bonus? That was a clear no. In the grand scheme of an entire life, that's just a temporary pain, a finite little blip you'd forget in a year. But the regret of not even trying to build his idea, that was a massive, soul-crushing yes, a permanent, haunting kind of pain. Okay, so we've got the historical blueprint from Bezos. It's a great story, but what does that have to do with us as investors, right here, right now? Well, this is where the framework gets applied directly to a modern investment choice. The argument presented here is that we're living through a direct parallel. Just like the internet was the massive, disruptive paradigm shift back in 1994, crypto infrastructure is positioned as the equivalent force today. And within that new world, this company BitMine, BMNR, is presented as the modern-day Amazon, which puts you, the investor, in the exact same shoes as Jeff Bezos. You're the actor facing a similar kind of choice. So now we run the 80-year-old test on this specific investment thesis. On one side, what's the risk of buying? Well, the worst that can happen is you lose your initial capital. It would sting for sure, but it's a finite, recoverable pain. On the other side, what's the risk of not buying? Well, if the thesis is even remotely correct, you miss a genuine paradigm shift. That regret is described as a permanent, poisonous pain that just eats at you for decades. Now, if the framework makes the choice seem so incredibly clear, so black and white, then why do so many smart investors hesitate? Why does anyone sell? The argument is it's because our own brains are actively, and I mean actively, working against us. And this hidden enemy, it has a name: loss aversion. This isn't just a theory, it's a real cognitive bias, proven by Nobel Prize-winning psychologists. It basically says that the pain you feel from losing $100 is about twice as powerful as the pleasure you feel from gaining $100. Our brains are just hardwired to avoid loss at all costs, even when it's totally irrational. The source material uses this fantastic analogy. Think of it this way. Your brain is basically a caveman. Its only job is to save you from a tiger. So when a stock price drops, that ancient, prehistoric part of your brain just starts screaming, "Danger! Tiger in the bushes! Sell! Protect the cave!" The problem is, there is no tiger. It's just a number on a screen. You're letting that caveman brain trick you into making a terrible long-term decision. Okay, so all of this brings us to the final section, and this is where the whole thing gets incredibly specific. This isn't just a general philosophy anymore. It all comes down to a very particular test for an investor, and it all revolves around a single number. $31. Now, this isn't just some random price point pulled out of thin air. It's presented as a specific psychological test, a deliberate line in the sand for every single person invested in this company. So, why this number? It's described as the indecision zone. See, it's not cheap enough to feel like an obvious screaming bargain, and it's not high enough to feel like it has unstoppable momentum. It's just uncomfortable. The argument is that the market is using this price to ask you one question. Do you really, truly believe in the long-term vision or not? And at this price point, it all comes down to how you respond. The short-term thinker, their caveman brain is going nuts. They're glued to the daily price, the noise. They feel that anxiety, that loss aversion kicking in. And what do? They sell. But the person using the regret framework, they have a 10-year vision. They ignore the daily noise, and they focus on the core fundamentals. And this quote right here just ties the entire philosophy together beautifully. Forget the day traders, forget the algorithms, forget all the noise. The real negotiation isn't with the market. It's with your future self. It's with the person you're going to be in 2035. And you're either making a choice they will thank you for, or one they will never, ever let you forget. So we end right where we began with this one powerful question. Based on this entire framework, how are you going to write the script for that future conversation? Are you making your decisions today to minimize temporary, short-term pain, or are you making them to eliminate permanent, lifelong regret? The choice, as they say, is entirely yours.